Good afternoon. It is Tuesday, December 19th, 2:30 p.m. People, I wanted to get this video out early. I've been watching these markets all day. Very interesting. We might be seeing an inflection point here, people. What I want to focus, obviously the big news is this tax overhaul, which they're going to be voting on. And it looks like it's a done deal. And that's definitely affecting these bond yields. The yields have come up today. Okay, so rising yields, expectation of growth, inflation, and that 2.4, which I believe is the first line of defense at the 10-year, 2.45 right now, and the 30-year, 2.81. So every time it gets to that 2.4 level, they bang it down. So we have to watch this, because this could be these rising rates that people have been waiting for. Okay, this start of possible inflation. Okay, not necessarily growth, but inflation. You could have inflation without growth. So we need to watch this very closely. And, you know, rising rates, like I said, is not a negative for gold. It's the real rate that matters, okay? Not the nominal rate. And that inflation rate is based on the CPI, okay? And I printed out this chart, people. This is the Consumer Price Index, going back to 1920. The blue line indicates the average CPI, okay, Consumer Price Index. And the base year is now 1982 to 1984. That's 100. That's the base, okay? Look at that chart. Now the red line, which is all over the place, prior to 1982, the base, and kind of steady after, that's the change in the average consumer price index, okay? How much it changes from one year to the next, okay? Now, by changing the base, they've changed the goalposts. They've made it the new normal, all right? So I'm sure you all remember, people, when you were a kid. Well, you might be a kid now, but when I was a kid, I remember a slice of pizza was 40 cents. They gave you one slice of pizza for 40 cents. If you wanted a Sicilian, it was 45. Okay, and it came with a little cup of water and sugar for 40 cents, right? Now, wherever you go for a slice of pizza, it's $2.50, $2.75, $3. A whole pie in some places in Manhattan and Brooklyn is going to cost you $30. So, but if they make $30 the new normal, right? Well, you know, just change the goalposts, right? And that's what they've done here. But let's not take our eye off the ball, people, because this is how they calculate inflation, right? Just change the goalposts. But look at that blue line. That's the CPI. This inflation, I have an article here. Japan's government revised up its growth projection. That's that growth. Japan's government revised up its growth projections for the current and fiscal years, forecasting the economy to expand 1.9% and 1.8% respectively on the back of steady improvement in domestic demand, the Cabinet Office said. Consumer inflation is estimated at 0.7% for this fiscal year and 1.1%, underscoring the challenge for the central bank to accelerate inflation to its 2% target. So this isn't just a United States thing. This is a global thing. Even in Japan, right, they can't get inflation 2%, right? It's a challenge for the central bank to accelerate inflation to its 2% target as prices continue to lag, an economy growing at a steady pace. So it's the same thing over there as it is over here. They want everybody to believe that the economy is growing, right? But we're not getting inflation. Isn't that the best of both worlds? Shouldn't everybody be, walking around with giggles on? Stock markets at all-time highs, real estate at all-time highs, right? And prices are low. Who could ask for anything more? I mean, really, it's utopia. It doesn't exist. No place, right? The gross domestic product projections compared with earlier estimates by the Cabinet Office of 1.5% and 1.4% growth respectively in the current and next fiscal years. Japan's economy has expanded at a steady pace this year, lifted by surging exports growth. And that's all they really want. They want a cheap currency so they can export. It's a race to the bottom, people. Okay? Japan's economy has expanded at a steady pace this year, lifted by surging exports growth that has kept the manufacturing sector humming. A key conundrum, there's that word again, that mystery, Greenspan, that conundrum. A key conundrum for policymakers remains persistently low inflation that is complicating the Bank of Japan's effort to exit its massive stimulus. So there you go, people. Wherever you look, they can't find inflation. So, but the 10-year is starting to maybe get a whiff of it. I want to change gears, though, people. There's no doubt it's been tough going for gold investors. There's stocks are at all-time highs. Bitcoin, cryptocurrencies going through the roof. The world is having a grand old party. And, if you're in gold and silver, it's been an uphill battle. There's no doubt about it. And there are people that will tell you that, it's never going to change, right? And there are people that will tell you that it's being suppressed and manipulated, which it is, okay? But the manipulation won't last forever. It can't, all right? And there are people that will tell you, well, gold really never moves up or down 1%. More than that, they won't let it. And for the most part, that's true. But I told you this story a few times. Joe Patagula, I used to listen to him on the radio, right? And gold wasn't reacting the way people, thought it would react. And they called him, gold. The people aren't scared. Gold's going down. People aren't scared. And then it popped, right? And he said maybe they just weren't scared enough. The Fed has put everybody to sleep right now. There's so much complacency, all right? We cannot fall asleep, people. And I went back and I remember the day when that happened. And I went back and I looked at this article, all right? It was September 17th, 2008. All right, gold contracts for December delivery rose as high as $90. I remember that day. $90 gold popped that day. As high as $90 per troy ounce on Wednesday, up 11.58%. Okay, so don't think those days are gone forever. No, not necessarily. Or its highest level since August 8th of this year. The move came as investors sought a safe haven from high volatility in the markets. Now, right now, we have low volatility. The VIX is like 9, okay? Everybody's asleep, all right? The CBOE Volatility Index hit an intraday high of 35.76, its highest level since January 22nd, 2008. Levels above 30 are regarded as high volatility. We're at 9. People are in comas right now, okay? Whistling past graveyards. Nothing rocks this boat. Doesn't matter. Nothing upsets the apple cart here. But I've said before, these markets can change on a dime, okay? Gold, which is usually used as a hedge against inflation, is now up 0.14% year to date. In percentage terms, the top 10 largest moves in gold prices were between 1979 and the year 2000. Today's jump in gold prices is the largest percentage move since January 1975, when data was first recorded. So it popped $90 that day as a hedge against inflation and a safe haven, right? So all the reasons to buy it, right? Now more than ever, that's still out there, all right? So we got to watch this, people. Gold prices exploded today, posting the biggest one-day gain ever in dollar terms as fears of more credit market turmoil unnerved investors and triggered a flood of safe haven buying. Okay? Because when the proverbial you-know-what hits the fan, they're not going to run to Bitcoin. They're going to run to gold. Okay? Like they always do. Money doesn't evolve. Okay? The huge rally came after the government moved overnight to rescue troubled insurer American International Group, AIG, with an $85 million bailout loan. The Federal Reserve stepped in after AIG teetering on collapse from losses tied to the subprime crisis, and the credit crisis failed to find adequate capital in the private sector. All right, so on and so forth. The psychology right now has everyone asking, who's next, right? A weaker dollar also boosted gold prices, and that dollar, since the rate hike, that dollar is under pressure. All right. Right now, the dollar is 93.60, down another 11 cents today. So we have to watch the dollar. Before the rally, gold had fallen 25% since surging to record levels above 1,000 an ounce in March. So it had been falling, right? Because people give up, right? They're chasing the next best thing, right? Everybody wants to buy a cryptocurrency right now. They want the action, right? So just when people tend to give up, you got to watch. The same market participants who got out of gold are coming back in now. And one thing about gold, they always buy it at higher prices. It's one of the few assets, it seems, that the higher the price goes, the more people want it. This is the start of an upward move, all right? So, yes, gold can pop $90. It has, all right? So, that's about it, people. Just want to watch these markets the rest of the day, see where we go here. Beautiful, beautiful day there outside today. Took a long walk this morning. Glorious day. If you can get out, you know, I highly recommend it. Watching these markets, investing, you know, you have to be on the top of your game, okay? Not just, you know, mentally, but emotionally and physically, okay? So if you can get out, take a nice long walk, enjoy the day, and Lord willing, we pick it up tomorrow. Ciao, people.